Good afternoon, ladies and gentlemen. How are you? Welcome back to my talk show. This morning, my government, the Japanese government, particularly Bank of Japan, announced the Japanese monetary policy. And surprisingly, Governor Mr. Ueda made the remarks that Japan will not change the monetary policy. So they will continue to do the QE against the QT of the US side. So since this remarks came out to the market moved very drastically. It means Japan's, interest rate is remained the same, okay? And even the US, they are trying to reduce the interest rate bit by bit, but see Japan, they don't want to increase the interest rate. So the difference between Japanese interest rate and then the US interest rate is nearly, remain the same. See, about later I would like to explain to you 3.7% difference, okay? So market was reacted to this news very heavily, and up to now, I think the dollar went up to 2 yen already. Very surprised, you know. Once BOJ mentioned the announcement, 1 yen up sharply. And after that, you see, continuously growing. So totally, up this moment, we have 2 yens up against the US dollar, okay? So interest rate, the news are very important, always give the big impact toward the currency market. Okay, so let me today share very important chart for you to understand the mechanism of the difference of the interest rate between Japan and the US. Okay, let's move on to a PowerPoint, okay? I mentioned correlation between the interest rate. In other words, this is a 10-year government bond yield. As you know, yield and interest rate is slightly different, right? But usually many people use the yield as an interest rate, okay? Correlation between the interest rate, 10 yen bond yield, difference between Japan and the US, and this difference will make the impact to the dollar-yen market. Okay, take a look at this. I put down the little formulas here. This is so-called, we call the coefficient. It's a kind of a formula to find out the correlation. R2, this is correlation, equal 0.8634. It's quite high correlated the number. Number one is if the correlation is 1, if the price move up 100, another side also move up to 100. Okay, you understand, right? Or opposite side, 100% correlated. Okay, but at this moment, the interest rate difference against the Japanese yen, against the US dollar, is the 0.8634. It's quite high correlated of the pairs, okay? So here, I put down the amount of the price of the Japanese yen. Vertical is 110 yen to 155. And then the horizontal line here, 1.5, 2, 2.5, 3, 3.5, 4, 4.5. And then inside, if you see this chart, inside there are so many dots, right? This is the actually the interest rate difference, yield difference between 10 years bond of the Japan and the US. Since today's morning, around 10 o'clock Cambodian time, Japan BOJ announced that they will not change the monetary policy. So 2 yens, dollar went up 2 yens, right? So maybe the current chart dot chart is a little bit different, but I would like to use this chart which I prepared yesterday. Okay, so look at this US flag. Their 10 years bond yield is about 4.5%. And then Japan's 10 years government bond yield is 0.8. So difference is 3.7. Okay. So if you look at this dot chart, 3.7 is around here. So if the difference is 3.7, look at the price here. Look at this, 142 to 145. Now the price is already nearly to 145 because the gap becoming bigger. Okay, because Japan doesn't want to change the interest rate. US is even they would like to narrow the interest rate due to this big information. The price is now hitting the 100, nearly to the 145. Okay, so according to this coefficient of the correlation, and according to this dot chart, okay, if the difference is 3.7, price will be in between 140 to 145. This is really correlated. Okay, so in order to observe the gold price, as you know, gold price is alternative asset, regarded as alternative asset. If the US interest rate go up, gold price will going down, right? So thinking about the next year, particularly I think the March, even Japan didn't change the yield curve control. I think this is my personal opinion. Japan will going to raise the interest rate a little bit. It's not a drastic change, bit by bit. So Japan will increase the interest rate around the next year, March, particularly after, we call it the spring wage talks. Each company will negotiate with the labor people, worker side will negotiate with the company to decide the base up wage. Okay, so after Mr. Ueda, governor of BOJ, observed this situation, I think he may change the yield curve. Maybe Japan will increase the 0.8 to maybe 1%. Okay, not now. So many people imagine that the BOJ will do the challenging to change the yield curve, but this challenging was interpreted in the wrong impression to the investor. 7th of December, do you still remember? Dollar went down nearly 6 yen, right? Within 2 minutes, dollar went down to 6 yen and then come back again to the 144 levels. So as I mentioned to you, this kind of news on the interest rate yield curve is very big, okay? But within this year, Japanese government, particularly BOJ, will not change the yield curve, okay? And also this morning around 10 o'clock Cambodian time, Mr. Ueda mentioned that Japan will not change the monetary policy. It means they will remain the yield same, okay? But next year, the March onward, after, particularly after the spring, we call it spring wage struggle or spring wage talks, maybe he might change the policy to increase yield a little bit up. So if Japan increase the yield from 0.8 to 1% here, the difference will be 3.2, right? So if this dot chart is correct, the ideal price between Japanese yen against US dollar will become 135, maybe 5 to 7 yen lower than the current price. It means US dollar is weak, means gold will going up. And moreover, if you watch the Fed chart, Fed watch from the FRB, they consider to decrease the interest rate yield 3 times from March to May. I think May they would like to cut the interest rate. So the difference between Japanese, interest rate, and then US dollar become narrower and narrower, bit by bit. Every time maybe 20 basis point to 25 basis point. So interest rate gap will become shrinking. It means this is the tailwind for the gold trader. Because of the interest rate gap is shrinking, narrower, US dollar become weak. Japanese yen become strong. If this happen from next March to May, your favorite gold price will sharply going up. But not this end of this year. In January, February, we start to talk about the this difference will become narrower. And then I think FRB will start to cut the rate from May. In Japan, particularly after, as I mentioned to you, spring wage struggle period finished, Japan may raise the interest rate yield, 10 years yield, to 1%. And the US side will cut the interest rate. If they cut 4.2, difference is 3.2, right? So 3.2 dot is around here. 3.2 is around here. So price may going down to current price of the 140, nearly 145 to 135, 10 yen difference. This may happen, I think, March to May time. So this is really good news if you are longer, if you're a buyer of the gold. So until then, I want you to pay great attention toward this correlation between the interest rate, in other words, 10 years bond yield, difference between Japan and US, and this will give the big impact toward the dollar yen. If dollar go up, gold price will going down. If dollar go down, gold price will go up. Okay, so reviewing this year, always big issues are interest rate between Japan and US, and then always if the gap is bigger, this will be a big favor to the US dollar, and US dollar strong, gold was going down. But next year, I do hope that dollar gold will perform very good appreciation, and you will enjoy the substantial profit. So this is my review as far as my analysis based on the correlation between the interest rate between Japan and US. Okay, so maybe within this year, I would like to talk a couple of issues which is very important for your gold trade. No matter how I mentioned about this dollar yen, this will closely relating to your gold price, okay? Because US dollar, Euro, Japanese yen are the major currency, key currency. US dollar is a key currency, but those three currencies are largely traded at the interbank. So these three information will give the big impact to the gold price. Okay, as I mentioned to you many times, gold is quite difficult to find out the news. but the gold is an alternative investment and also priced in US dollar. So as far as you study about the dollar tendency against the yen, against the euro, against the British pound, against the Swiss franc, you see, you may have some very good picture in your mind. Okay, so still we are on the 19th, right? We have 1 week more, so I would like to give you some good sharing. Okay, so stay tuned with us, and thank you very much for your watching.